Welcome back to the Global Business Report here on Arise News. We're close to 15 years since the Central Bank of Nigeria launched the Microfinance Policy Framework with an aim to enhance access of micro entrepreneurs and low-income households to financial services. Stakeholders have remained divided about the impact of this policy in closing Nigeria's financial inclusion gap.
Yes, well, while some industry stakeholders praised the CBN for increasing the minimum capital requirement for unit and state microfinance banks by 900% each to 200 million naira rather, and 1 billion naira respectively, and that of national microfinance banks increased by 150%. Some are of the opinion that this does not help address the core question of bringing up those who are at the lowest base of financial inclusion in Nigeria. Now, microfinance expert and GMD of Irvin Investment Group, Nwangwa Uzonna, joins us from our Abuja studio to discuss this issue. Good morning, sir. Thank you for joining us. Let's get right into it.
Indeed.
Well, it's been 15 years since the launch of the microfinance policy and 8 years since its last review. What has been the achievements in the sector so far, and what are the drawbacks?
Thank you very much. In 2005, when Malam Sanusi took over this leadership of the Central Bank of Nigeria, he introduced the banking regime, like you rightly said. He introduced the unit microfinance bank, the state microfinance bank, and the national microfinance bank. And then this policy was also reviewed to, initially it used to be 20 million for units as share capital base for unit microfinance bank, and then 100 million for state microfinance bank, and of course, 1 billion for National Microfinance Bank. This has been reviewed to, now we have, if you want to operate a unit microfinance bank, you have to have a share capital base of 200 million. Unit microfinance bank means that you cannot, move from a particular location. So you are limited to a particular location. If you're operating in, take for instance, in the island, you cannot move beyond the island. So and that share capital base was increased to 200 million. For State Microfinance Bank, it was increased to 1 billion. And that means if you're operating in the FCT region, you cannot move beyond FCT or Lagos or Abia State, as the case may be. And then that of the National Microfinance Bank was recapitalized to 5 billion. That is, you are allowed to operate everywhere in Nigeria. Now, as a country, I wouldn't say we've done fairly well in financial inclusion when it has to do with the management of the microfinance institutions here in Nigeria, because countries like South Africa, Botswana, and Kenya are actually ahead of us. Now, do you know that in Nigeria, about over 39 million adults in Nigeria do not have access to financial services? And that represents about 46.3% of adults living in Nigeria. Now, only about 53.6% have access to financial services. In this 53.6%, about 36.4% actually play in the formal sector, that is the commercial banks and the regulated microfinance institutions. And then about 17.4% of the population of adults that have access to financial services actually patronizes we call them the non-government organization microfinance institution or non-deposit microfinance institutions. And even at that, we still have about 80% of Nigerians are not financially included. So I wouldn't say we are doing well, we're actually lagging behind, but there is room for improvement.
You're right, Microfinance institution, and what should Nigeria's version focus on?
Of course, we are operating a global financial system, even here in Nigeria. What you see, the financial standard in Nigeria is actually the same thing you get in Ghana, you get in South Africa, you get in the US. It's a global financial standard. In Nigeria, we're not doing bad in terms of the policies of the CBN, in terms of financial literacy, in terms of what the government is doing to insensitize the public. But you see, there are so many factors that are also militating against financial inclusion. And that is bank charges, that is, when the banks were recapitalized in 2005, most of the guys who are playing in the commercial sector, that is in the mainstream sector, they could not meet up with the 25 billion minimum capital base. So they had to come into the microfinance sector, and they started playing. I know, remember these guys used to be bank CEOs, commercial bank CEOs, so they find it difficult to give out small loans, which actually is supposed to be the role that microfinances play. So these days you see microfinances competing with the commercial banks, making financial inclusion very difficult for the unbanked areas. So these are the factors that we see today. And ordinarily, in terms of the modus operandi of the microfinance banks, it's supposed to be simple, it's supposed to be seamless, it's supposed to be for the small and medium-scale enterprises. But you see, because of profitability, because of most of the microfinance institutions are in particular locations in Nigeria, and most of them are in Lagos and Abuja, and then few in Port Harcourt, because ordinarily they're supposed to be in the rural areas. But because, these rural areas will not give them the kind of profits they want, that is why they are concentrated in the urban areas. But I think the government can actually do well to, compel these microfinance institutions to go back to the rural areas and then actually, get these people living in the rural areas.
Let me stop you right there, if you give me the grace. You mentioned something very interesting. You mentioned Ghana and South Africa and their microfinance industries being ahead of us, so to speak. Tell us how you feel that those countries and those sectors are outperforming Nigeria.
Okay, take for instance, it took Nigeria as at 2003, 2004, a country like Ghana were already having access to the automated teller machines. But it took Nigeria it was around 2005, 2006 that the ATMs were introduced to the system. Now, the cashless economy of the CBN was actually piloted around 2011, 2012. But you see, most Nigerians, especially some of them living in the villages, actually don't have right knowledge to this payment platform. So it took was not until 2013, 2014 that Nigerians, especially those who don't have access to formal education, were able to even take the debit card from the bank. So this actually makes it very difficult. And most microfinance institutions are not technologically driven. This is where these other countries are ahead of us. So we should make our microfinance institutions to be technologically driven so that everybody have access to finance. Everybody, whether you are, of course, we also have to commend the CBN for the introduction of the mobile money platforms, and this has also helped. So if our people can be properly sensitized and educated on the need for financial inclusion, especially in the rural area, I hope in a couple of years, in less than 2-3 years, Nigeria will be ahead of these countries that I mentioned.
All right, Uzonna. Now, talking about loans to entrepreneurs, what has been the impact of the microfinance sector in Nigeria?
The microfinance sector, of course, it's also, let me explain this. We have two types of microfinance sectors. We have the highly regulated, that is the government-regulated microfinance institutions. and they are empowered by law to give loans, to take deposits, and also run a savings scheme for the masses. We also have the non-governmental microfinance institution or non-deposit microfinance institution. They are not allowed to take deposits, but they can give out loans, macro loans to individuals and to small and medium scale enterprises. For investors, I don't think it's more of a policy thing. It's more of a security thing, because why most investors are not in Nigeria is not because of favorable market condition. No, it's because of the security situation. If we get our security right, I don't think we have any problem with that. Most entrepreneurs, like in Lagos, if you look at Lagos, I don't want to mention names, they're actually doing well because accessibility to funds is very easy. It's better with the microfinance than
Give us
the
more
mainstream
details on Lagos. Tell us why.
Sector.
Sorry, sir. Explain to us why Lagos is doing well compared to other places. Why is that?
Lagos is doing well because they are not, they're actually people-oriented. We have some of the best guys doing business in Lagos. There's this saying that if you're not in Lagos, you're not in Nigeria. If you're not running a business in Lagos, you are not running a business in Nigeria. So most of these guys are financial gurus. They're doing well because they understand the markets. And this is something that should be replicated in other parts of Nigeria. Because, for instance, if you want to access loan from the commercial bank, it might take you up to 2 weeks. It might take you up to 3 weeks before, the approval process, before the account officer will get the process, then forward to the line manager, go to the supervisor, to the general manager, and then the credit analyst. You see, most of these processes take time. But with the microfinance institutions, you see that most times the processes are seamless. Within 2-3 hours, you can access funds. So these are the reasons why these areas are thriving. And I think what we have in Lagos should be replicated in other parts. It seems that there is concentration. I won't blame people because, of course, the population is also there. People want to do business where there will be profitability, and that is why people are in Lagos. But I think even though we cannot have what we have in Lagos in other parts of Nigeria, we can at least replicate some of them in other parts of Nigeria.
All right, sir. Nwangwa Uzonna, I'd like to thank you for your thoughts on those issues. Good to have you.